What's up, you guys? Michael here. Let's talk a little bit about some of the mysteries behind credit scores and also why it's important to have a higher credit score and how it can affect you guys later on in life. Also, we will talk about ways to boost your credit score, things you can do today that will ultimately boost your credit score almost immediately, and then things to do over the long term to continuously build on that credit score history. All right, so all you have to do is donate $30 below and I will guarantee I'll increase your credit score by tomorrow for a total of 30 points. I'm only kidding. We're gonna talk about ways that are absolutely free and honestly crucial for you guys to boost your credit score over time. But first, if you guys don't mind giving my channel a little boost and just hitting the little like button below, and also if you get to the end of the video, if you find value out of this content, just go ahead and subscribe, guys. If you don't mind, I genuinely appreciate it. It helps get my content out there, and hopefully you can find value in some of the other videos that I do in the near future. All right, so let's talk about the almighty credit score and really just demystify credit scores as a whole. So you guys can think of credit scores as essentially a report card of your trustworthiness to pay off loans or pay back money that you borrowed from somebody else. So lenders use credit scores really for two things here, right? So one is if they will actually lend you the money in the first place, and two is what interest rate are they going to charge you for that loan. And I'll give you guys a quick example of how this can drastically affect your wallet long term. So here's a little snippet from a website called NerdWallet, which is a great website for all things credit and other personal finance. Someone with a FICO score in the 620 range would pay $65,000 more on a $200,000 mortgage than someone with a FICO score of over 760. And for a 5-year auto loan of $30,000, you as the borrower with the lower score would actually pay over $5,100 more than somebody who has a higher credit score. And lastly, a 15-year home equity loan of $50,000 would cost the lower score borrower $22,500 more than somebody with the higher score. So for the younger folks watching who may be in high school or college or out of college and don't have any debt of any type, it is important to build a credit score over the course of time. So when you do need to go into the bank and ask for a home loan and take out a mortgage, or go to, the bank and ask for an auto loan of some sort, it is important to have a higher credit score because ultimately it can cost you guys tens of thousands, if not hundreds of thousands of dollars, depending on the size of that loan. It's actually not just about obtaining loans and how much you pay for those loans, but credit scores actually play a pretty large factor in some of these following areas. Landlords will actually use your credit score to evaluate the trustworthiness for you, the renter, to pay them rent every single month. So if it comes down to maybe 5 different renters who have submitted an application for an apartment, they're more than likely going to take the person with the higher credit score because they're more trustworthy to pay them rent on time every month. Because again, them as the investor, they need to collect that money in order to make money on their investment as the home or apartment owner. Now, when you guys do have an apartment or have a house and you need to sign up for utilities, electric, gas, water, things like that, utility companies will typically run your credit if you don't have a history of paying utilities over the past couple of years. And by running your credit, they're going to determine how much you need to submit in a utility, basically a security deposit up front. So sometimes this might be $0 if you have a great credit history and a history of paying your utility bills on time. But for other people, especially younger folks, they may require a $50 to $250 or a $500 deposit to ensure that they're going to collect in the future. Because what they don't want to happen is for you to have a $200 electric bill one month and not be able to pay it, because then they're out of luck and can't collect on their money. So now that you guys have kind of a base understanding of credit scores in general and why it's important to have a higher credit score, let's talk about how credit scores are actually calculated. And this is probably one of the biggest mysteries for a lot of people out there, so I'm hoping to break it down in specific order here. So there's 5 categories that we're going to review. Number 1 is your payment history, and this is the largest factor in your credit score. It actually accounts for 35% of your total score, and it's quite simply, do you make your payments on time and are they accurate? Now, the reason this accounts for such a large portion of your credit score is because it is honestly the simplest way for credit bureaus to look back at your payment history and see if you simply just made the payments on time. And this will be the most crucial for you if you are, struggling with your credit score and need a good way to boost it, is just ensuring that you pay off each loan you have, whenever the statement balance is due, just make sure it's paid off and don't be late on any of your payments. Now, if you guys have missed a few payments in the past, don't worry, it's not gonna haunt you forever. It will take a little bit of time to recoup that because again, it's gonna take the average of your payment history over the course of the long term. So if you guys are new to maybe having a credit card and you haven't paid off the balance, let's say 2 out of the 10 months, and so you've only made 8 payments on time, your payment history is only gonna be at 80%. Now, if you continue for the next several months up to, let's say, the 50 statement balances, and again, you only missed those 2 original ones and you haven't missed another one since, you will have 48 out of 50 payments submitted on time. Therefore, your score for this will actually be boosted to 96%. So again, this can be improved fairly quickly depending on your credit history, but this is something gradually over time and is the most crucial to your credit score. Number 2 is credit utilization, and this actually accounts for 30% of your credit score. So close to number 1 in payment history, credit utilization is going to be the second most critical factor into calculating your credit score. Now, credit utilization is quite simply the amount of credit that has been made available to you that you have used during that period. So a way to break this down is you have one credit card, and let's say your credit limit is $1,000 per month. And in this first month, for example, you use $200 of that $1,000, your credit utilization is only at 20%. Now, a general rule of thumb is the lower the better, and if you guys can, stay under 30% credit utilization. As soon as you get above that and continue up closer to 100% utilization, you're gonna get dinged pretty hard. This is something that you can honestly fix pretty quickly, and this is the reason a lot of people actually pay off their balance as they go throughout the month. It's a great way. Just keep it under that 30% mark. If you can keep it closer to 0, the better as well. Number 3 is age of credit, and this accounts for 15% of your overall credit score. So this is really how long you've had credit and what is the age of each line of credit. So if you guys have opened a credit card maybe 4 years ago, and you haven't opened any other line of credit, no auto loan, no mortgage, no other credit cards, anything like that, your average age of credit history is gonna be 4 years. But if you open a new credit card today, it's actually going to bring it up to an average of 2 years, even though technically you have credit history going back 4 years. I know it sounds kind of silly, but again, they're going to take the average of that. So that's why I encourage you guys to maybe have a few different lines of credit earlier on, as long as you're paying off the balance in full each month and keeping your credit utilization below the 30% mark, then it doesn't hurt you to have some more lines of credit open over the long term, because again, the longer credit history that you guys have, it's going to help boost your score over the course of time. Number 4 is the types of accounts, or in other terms, diversity of credit types that you guys have. And this only accounts for 10% of your credit score. So while it is important, it does count drastically less toward your credit score than some of the other things that we just previously talked about. Now, this one honestly is somewhat silly in my mind, because if you guys have the money to buy a used car cash, why wouldn't you just do that, right? Instead of taking out an auto loan and paying 5 to 8% interest every single month for the course of the time that you have that loan, whatever it is, 2 to 5 years. But it is important to keep in mind that 10% of your overall credit score is essentially the diversity in the type of lines of credit or the loans that you have. So if you only have one credit card open, no auto loan, no mortgage, no student loan debt, if you guys were to have, maybe 2 credit cards and an auto loan, among other things, or a personal loan, it actually helps boost your credit score by having a little bit of diversity in the types of credit. Number 5 is application history, and this also accounts for 10% of your overall credit score. And this goes back 2 years on how many times you've applied for a new line of credit. So every time you apply for a new credit card, apply for an auto loan, mortgage, anything like that, that counts as an application for credit. Now, if you're like me, the first thought that comes to mind is this sounds somewhat contradicting, right? Number 4 in the types of accounts, or the diversity of credit that we have, it's essentially encouraging you to have multiple loans outstanding, while number 5 in application history to not have too many hits on your credit over the course of the past 2 years. So it's kind of like finding the happy median, but this is also why each of these categories only count for 10%. Now, in my mind, there's generally 2 types of people that fit into the category of having a high application history over the past 2 years. Number 1 is generally people who need money and don't have it currently in their checking or savings account, so they open up multiple lines of credit in order to use that money today and then work backwards in paying that off. Those types of people typically have a lower credit score because they're using a high credit utilization every single month on multiple lines of credit and end up being late on their payments. And type number 2 is just typically investors using or leveraging the bank's money to invest in, let's say, real estate or rental properties. So this has happened to me over the past year or so, as my wife and I have purchased several rental properties that we list on Airbnb, but every single time that we open up a new line of credit, essentially by taking on a new mortgage, it counts as an application. So the amount of applications that we've had in the past year or two are quite high, but again, it's different than someone just opening up multiple lines of credit through credit card companies and not being able to pay off the balance every single month. Now again, this only accounts for 10% of your overall credit score, so as long as you're not just going bananas applying for new credit every other month, then you guys should be fine when it comes to this category. All right, so let's talk about the ways that you guys can boost your credit score today and days moving forward. Every single month moving forward, make sure that your statement balance is paid off in full, on time, every single month. If you guys do nothing else, this will be the #1 way that you can immediately boost your credit score, and you'll see it gradually creep up over the next several months. Now, if you guys cannot pay off any particular month, you cannot pay off the full statement balance, it is crucial that you at least make the minimum payment. So it's better to make the minimum payment than to make no payment at all, because you won't get dinged quite as hard as if you were to get dinged for not making any payment at all. But again, just be very cognizant of this moving forward. This plays into 35% of your overall credit score is payment history. So making payments on time is the #1 thing that you can do to improve your credit score. Number 2, again, is just keeping your credit utilization below that 30% range, especially when your statement balance is about to be posted. Now, here's a thing that a lot of people actually don't even know. So even if you pay your credit balance in full every single month, if your credit utilization is, let's say, above that 30% range at the time when credit is actually reported, that is what the credit bureaus are going to see as overall credit utilization. So what you can do is a little, trick is to actually pay off your credit card throughout the month, even if it's multiple payments, just to make sure it never goes above that 30% threshold. If you can keep it at 0 for most of the month, that way you can assure when your credit is actually reported to the credit bureaus that your credit score isn't going to get dinged for being over a certain amount utilization. So my recommendation to you guys is keep it below 30%, and if you have to make a payment that's going to jump you above that 30% utilization mark, just pay it off immediately, like the next day, again, before it's reported to the credit bureaus. Now, if you guys can do those 2 things consistently, that is going to account for 65% of your total credit score. So just remember that moving forward. If you do nothing else, do those 2 things, pay off on time and pay off the full balance every single month, and keep your credit utilization below that 30% mark, and you guys will almost immediately see your credit score jump, and especially over the next 3 to 6 months, you're going to see it creep up, I promise. Now, the next thing you guys need to do, especially for the younger guys and girls watching, is if you don't have any form of credit history, I would encourage you guys to sign up for a credit card. Even if you're in high school or college, you could talk to your parents, talk with the bank, and just get maybe a student credit card. Even if your credit limit is $300 and you only use it for gas, or you don't even use it at all. Now remember, part of your credit score is actually the average length of time that you've had those various lines of credit open. So the sooner you guys can have something established, even if it's just a student credit card, the better. Now, the next thing you guys can do is actually increase your total credit limit. So what you can do is actually ask, the credit card provider to increase your limit. If they won't do that, you can actually apply and open a second credit card with a different company. And what this will do is actually boost your overall credit limit split between the 2 cards. So, in order to keep under that 30% utilization on this one card, you can actually split the cost between the 2 cards. And again, having multiple different lines of credit open will also play into affect your overall credit score. Now, unless absolutely necessary, never close out an older line of credit, especially if it's maybe the original first credit card that you had. This is important because it will actually help you establish a longer credit history, because as soon as you close out that account, it's actually going to bring your credit history to a much shorter time frame. Now, hopefully you guys are able to see an immediate boost in the first 1 to 3 months by taking on some of this advice. But again, just remember, this is a long-term game, and in order to see the gradual increase in your credit score over the course of time, you need to do these things consistently every single month. Now keep in mind, this will be important over the next several years for a lot of you, especially for the younger folks out there, because you may not need an auto loan or a home loan today, but eventually you will want to probably purchase your own house. And you guys are not going to be able to do that unless you have some sort of credit history and honestly a good credit score. So by doing some of these things earlier on, you're going to set yourself up to save thousands and thousands of dollars in the form of interest over the course of that auto loan or over the course of the mortgage. Now, something to obviously keep in mind, guys, is to never spend money, especially on a credit card, that you wouldn't ordinarily be able to afford in the first place. So I encourage you guys to never open up a new line of credit or open up a new credit card and buy something that you couldn't ultimately buy with cash right then and there. Credit is a tool to use to ultimately boost your credit score so you can save money over the long term, again, by buying cars or buying a house, and you can save money in the form of interest. It's not a way to buy something that you couldn't afford today. That's actually how credit cards make all of their money, and they charge high interest, 20 to 25, maybe even 30%. So if you guys are not paying off that credit card balance in full every single month, you're gonna pay a fortune in the form of interest over the course of time. Now, if you guys have interest in investing in real estate someday, similarly to taking out a loan for your primary residence, the bank or the lender is going to check your credit score and your credit history to again evaluate your trustworthiness as the borrower to take on those loans. So it is important to establish a strong credit history. Now, if you guys found any value in this video, please do me a favor, hit the like button below. And if you want to see similar content in the future, anything around personal finance, investing, real estate, some travel vlogs as well, do yourself a favor and just hit the little red subscribe button down here. And hopefully you guys can find value in future content as well. But thank you guys for watching today, and we'll catch you next time.